Hey guys, what's going on? Welcome back to another midweek forecast. And guys, this is going to be a special one because this is going to be a midweek forecast of CPI. Now, in this video, I'm going to be explaining how to sort of trade CPI, what CPI is in sort of as simple as I can explain it, and sort of what to look out for this week, because we did have a very big drop from NFP. Now, could that sort of be indication, and could we use that drop from NFP? You can see this is a drop right here. To trade CPI. Now, obviously, if you guys don't already know, CPI is a very, very high impact news event. It stands on par with sort of NFP and FOMC releases. CPI at the moment is a very, very key event that a lot of people are looking at because it's sort of providing indication of what the inflation rate is at the moment against with the US dollar. If we have a look at Forex Factory here, you can see that this is released at around 1:30 UK time. This is 8:30 US time. So expect, tomorrow, expect some sort of fireworks around this time. Wherever you guys are, you already know when sort of news gets released, but it's obviously 1:30 UK time. And this is sort of the change in price of goods purchased by consumers, excluding food and energy. So you can see that we have CPI right here. If you hover over this one, this is the change in price of goods. So this is sort of your inflation rate numbers. You can see we have quite a few red folders, and we also have FOMC press conference. So we do have a very, very busy Wednesday. And this is something I just realized now. I only thought it was just CPI, because if we go on TradingView, you just hover over here, it just says CPI. But then if you look at the next one, we have Fed interest rate decisions, Fed press conference. So a very, very busy day tomorrow. And that's why I sort of decided to do a sort of update for you guys, and to give you guys a little pointer to sort of what to look out for and how to sort of not blow your accounts. This is obviously something based on what I talk about. This is just a little disclaimer here, that you shouldn't be trading real money with what I'm talking about. This is just my opinion. I'm not a financial advisor or anything. Please don't trade real money. Use what I say in demo and practice it on your demo. Do not use this stuff in real accounts. Anyway, with all that sort of stuff out of the way, let's have a quick look at the previous sort of forecast and what's been happening with gold. Whenever you see the previous results, you can see that the forecast was obviously 0.3%, and it stayed at 0.3. So let's have a quick look at what happened to the market on May 15th. If we go back to May 15th, you can see here's May, and here's May 15, right there. You can see that we're on the hour time frame here, so we've got some large candles kind of eating at each other here. So we have a big move down, and then price uses the same sort of move back up. So you can see right here at 9 o'clock, when the release happened, price pushed up. It then spiked above that prior high, and then price then pushed all the way back down to possibly retrace, collect some liquidity, charge up for that 10 a.m. sort of main push that we ended up getting for price to continue up. And you can see once we did get that continuation up, price then just used that same CPI fluctuation that we had around about here. When you bring that box across, you can see price came back to retest it, failed to break any lower, and once we ended up getting that break up on Friday, you ended up getting that bigger push to the upside, and that was also with Fed Chair Powell's speech as well. So you can see how I'm using price action here, and it goes in line with these news events. Fundamentals is key when looking at the market. However, if you want to just trade price action, you can do that. I've seen there's many people who make money based on just price action and not looking deeply into the fundamentals. They know they're there, they know they're going to get that reaction. The fundamentals will provide that sort of volume influx that you get, that little injection of volume, these consecutive big candles that you end up getting. That's what these fundamentals provide. But it's about knowing how that sort of relates with price action. You can get a fundamental release, which is absolutely crazy, but the market doesn't move. Why? Because the investors need to understand what's going on with that sort of prediction or with that sort of outcome of that news event. They need to digest it. They need to sort of then place the orders or whatever's been going on in the market. And then whenever it's ready, the market will then just go. Usually, most often, it always happens right when the news events release. So usually in CPI, price action is usually very, very slow. You can see here the day before, look what's been happening. Price is slowly climbing. This is all manipulation set up for CPI. Price went up, failed to break any higher, started pushing down before the release, and then look what happened. Price spiked up, big push down, and then a big move up. This whole sort of spike up and move down is there to trap traders. Let's drop down to the 15-minute and quickly show you guys what was going on with this sort of price action. You can see as price is dropping down, this big green handle was the release, right? It was a big instant push to the upside, and then after the next sort of 15 to in the next half an hour to 45 minutes, price then dropped back down and basically negated all the gains that was you saw what happened when price got the news. It then pushed all the way back down, and what did it do? Came back for this liquidity little area here. You can see how price is sort of bouncing off this green level. This is a good place to sort of buy because there's stop losses and liquidity sitting here. If price is looking very, very clean and you can potentially put a line below it, that is where price is likely going to go to collect some liquidity, tap into this fair value gap. Wow, looking at this sort of price action, very, very clean. Tapped into this little imbalance here because we have a gap. And if you guys don't know about imbalances, please do go do some research. There's loads of free videos on YouTube that you can sort of get into, and you can see how powerful they are to collect the liquidity here. And then look what price did straight after. Pushed straight up, continued higher, pushed up for a new high, and then this became a key level to then trade the next day. If we then mark this whole sort of manipulation and bring that box across, notice how price tapped into this sort of manipulation. We have a gap here, we have a few gaps on these candles where price then traded back into, failed to break lower, and then price then used that as a boost, and you can see price went further up. So that is how we sort of look at trading CPI with price action. The move may not happen on the day, it may happen the day after, but the thing is that you need to be ready and not sort of over leverage and drain yourself out the day before or on the day. You may get some moves, you want to sort of see what happens with the market. Anyway, that was a sort of little recap I wanted to do. Now it's time to sort of get into this week and see what's going on. Right, so to start off the week, let's sort of monitor and see where price opened and see where it's been basically. Let's get some history on some price action and locate where the liquidity levels are. So here we go, Sunday, 6:30, market opened. I'm in New York time, guys, so -4. I'd like to trade in New York because the market mainly runs on in New York time. Obviously, you have New York session as well. So if we have a look at here, market opened. Notice how price did not break lower than Friday's low, right? This is a good sign that price would likely revisit this level. This is called sell side liquidity. We have sell side liquidity here. Why? Because all the buyers will be placing stop losses here. And you know the people who are placing sell stops, the people who are selling on the breakout, they'd place them right here. So market would likely come back to this area there. Anyway, let's continue. Price then continued its bullish structure. It continued the momentum and pushed previous highs every time. You can see that we have highs here. Price retraced back down into this. And today was, as I said, on the free channel. If we go and find it, where we have it here. Right here, I'm expecting bullish moves to tap into this 4-hour fair value gap. Let's go back to the chart and have a look at what's been going on. Price is continuing up and we have a bit of a retracement here. Now this retracement is very key to see what price will do going into tomorrow. Let's locate the nearest order block. Obviously we have one here at the 1 hour time frame. Price has now pushed out and retraced back into this order block here. We have a move from here to there. This is a level that I'm watching. If we go and mark a fib and see how much it's retraced, you can see it's now retraced back into the 50% area. This tells me that price is now coming to a discount for another bullish move higher. Why am I still looking for bullish moves? This is the question. You know, a lot of people are saying, oh, why are you looking for? Why are you not selling? If I go onto the 1 hour time frame and zoom out, look at where price is currently sitting from where price was on Friday. Price is all the way down here. This is an area where people would like to buy. Why? Because it's at a discount. Price is at a discount at the moment. I've marked this 50%. If you guys didn't notice this earlier, well done. This is the 50% from here to here. Anywhere above this level, you want to be a seller. Anywhere below, it's a buy level. So this gives me that bias, and it gives me that sort of narrative on what I'm expecting for today. And as you can see, I was expecting for buys, price then pushed up. Now, let's sort of summarize this up and start speeding this up and start looking at what's going to be happening going into tomorrow. Again, this is not all guaranteed, because a lot of the times fundamentals can go against price action and just rip straight through these levels, and you won't even sort of know what to do. And if the market does this, usually what I do is I sort of just stay out the market and let the market calm down, and then follow the technicals again. So monitoring this, here we have your 4-hour gap here. This is a 4-hour imbalance. This is where I'm expecting price to tap into as we're sort of climbing up. Price is not tapped into any major liquidity level. It's taking out prior highs and failing to break any previous lows. So I'm still expecting price to push up. So what I may look for an overnight trade here to continue this price action up. The key level here is obviously this swing low. If price breaks below this swing low, right, then you're likely to see price action continue lower. But for now, you can see it's following its trend. I'm expecting CPI to break this trend, because we're expecting a big move down. Why? Because we had a big move on Friday. This is just sort of just a retracement price to just get back up into that sort of premium level for then price to get dumped again. So again, I'm not ruling out the sells. I'm not ruling out sells, or I'm not ruling out this low at the moment. We're still looking to get that taken out, but I'd just like to explain for those who are unfamiliar with the market and have come here for some education, and that's what I like to provide in my videos as we keep going. So we have this 4-hour fair value gap, which I'm watching. That is going to be a key level going into the CPI. If I move this blue mark there. So since we have two news events on the same day, what we could get is, with CPI, we could get the manipulation move, or the move that pushes the market up. This is sort of my analysis on what my opinion will be if this level is sort of intact. So if this stays intact, we're likely to see CPI push price up as high as it can into or above this 50% level. If it starts to get above this 50% level, this is a good area to start monitoring for sells. Well, I remember when I said anything above that 50% is a good premium area to sell. You wouldn't want to sell when things are cheap. You want to buy when things are cheap. You want to sell when things are expensive. You know, when you want to just sell it to the person who's willing to pay the higher price, and that's what we wait for. So we would like to see CPI push price up here, and then with FOMC, because that is the news event that will provide volume later, we're likely to get that volume impulse at FOMC, where we could get that initial bearish move down. Why? Because we have all of this liquidity on the way up. It will likely get collected. If obviously structure starts breaking, this is all forecasts that I'm sending before. You'll want to see what happens live. This all could change depending on the CPI results. Now, we all know with inflation rates, I doubt they'd be sort of changing anytime soon. Inflation will just either stay the same or continue rising. If we have something that changes that, then the market will go crazy, and then price will continue to fall, right? But this is where we need to see what we get, and we need to then react off it. You want to react off the market and not sort of use your own emotions to guess. You want to see what the market gives you, and then if it gives you that sort of signal, then go for it, and then you want to sort of react off it. As you can see right now, we're getting those signals that right now price wants to keep climbing up. Where's it going? It's getting into that premium level. It's all sort of it makes a story in your head. So I'm expecting for price to sort of push up into this level. You want to then see price slow down, consolidate, break structure. And if you get that sort of break and it's aligned with, that FOMC time, say for example, we have FOMC here. Say if that's aligned with the FOMC fundamental, that interest rate decision, and we get some change or something happens and price is pushed up, all this price action was sort of premeditating that we would get some sort of change on FOMC. This is how the market sort of moved. We've seen it countless number of times when we usually get sort of a shock. When we usually get sort of a shock news release, the price action is ready to sort of dump with the market. It's already retraced. It's had something crazy prior to the news. A lot of the times, the sort of big institutions already know what's going to be coming out with the news, so they're already ready. They've positioned themselves at a sort of winning position. The prices sort of skyrocketed up before the news. Then price action ends up moving towards the downside. So this is sort of my analysis of what I would like to see with a sell. I would like to see price sort of push up above where 23.37 is, give that sort of indication that price wants to start slowing down. An example of price slowing down would be something like this, right? You can see that you have the price moving up, and then we have consolidation for a few hours. If I drop down to the hour time frame, you can see it a lot better. Let me remove that and drop down to the hour. You can see here that we have this sort of slow grind up, big push down here, and then price ends up breaking out of a certain trend line, and then we end up having a continuation here with NFP. So that's sort of my idea on what I'm expecting with tomorrow. We also have PPI. Let's not forget, PPI is on the 13th of June, 1 month before my birthday. PPI is on the Thursday, I believe. So what we could get, and I'm covering all scenarios here, is we could get a straight climb up on tomorrow with CPI. Let's say CPI pushes price up, FOMC pushes price up, and we still get price climbing. You then want to see a price action start to slow down here, and then with with PPI on Thursday, we could then get the complete reversal all in one day. So again, this price action stuff, you need to sort of monitor where price is, and see and sort of note down where the liquidity is on sell. So going into, if you guys have stayed this far in the video, well done. If you guys haven't already, please do subscribe, and that'd be great, and leave a like on the video if you guys want more and you're actually sort of learning stuff from here. One thing I wanted to mention for those who have sort of stayed this far is I'm trying to sort of look for a setup at the moment, and we're getting, obviously you can see Monday's high was taken out today, and now price action is sort of slowly declining. And what I'm watching here is I'm watching this level right there, right? I'm going to mark this as an order block. We have a 15-minute order block here, which where's the order block? There it is. We have a 15-minute order block, which I'm watching. If we go to the 30, could get spiked out because it's with a wick. Would like to see what happens here. I would like to see what happens with price here, because price could tap into this area. If we get a break above that wick there, then we're likely to see price attack the prior highs here. So this is a sort of setup I'm watching. I'm also thinking of sort of leaving this sort of stuff live on YouTube. So I'm thinking I've got different plans where I would like to go live on YouTube. So I'm looking forward to sharing that with you guys. But I'm watching to see if price breaks a prior high. You can see price is slowly retracing here. It's on its way down on a slow retracement. If we get a breakout here, we can then get in on a continuation to attack the prior high. And if you guys don't know why I'm still buying, you guys already know by now I'm trying to get price above that 50% level. And if we get those indications that price wants to keep going there, we might as well jump on the train. You know what I'm saying? You can see here that we have that sort of move every time. We're getting that sort of move here. You can see it's climbing, it's pulling back down, it's climbing. So all of these are little short retracements that just sort of getting more orders in to get price to push back up. So that's the area I'm watching. Would like to see that occur possibly overnight or even in London session tomorrow. And my sort of point of failure would be this sort of swing low here. If you go on the hour time frame, yep, that is the low. So price action could bounce around with this whole level if price holds off here, and then you start getting that sort of move back up. This will be a good level to buy to continue. However, the flip side of things is if price breaks below 2300, I guess, no, 2397, then you're likely to get move to continue straight down, and that could be your CPI. Now with that, if price sort of attacks this low now, then you could be on another move where price could attack this prior low here, 23.76, and then you could get your sort of move back towards the highs again, because again, this is all liquidity that's still been left. It's not going to forget about it. Price action will come back for it. So there's something I just want you guys to be aware of. But if you guys enjoyed this video, I'm going to leave it there. Try not to get too sort of heavy into that explanation, because, you know, I could go on for days to explain on the possible scenarios, because, you know, it's always good to prepare yourself, but I'll be here ages to prepare yourself. So for now, I've given you my opinion on what I would like to see. Actually, price, this is the sort of safest approach. The highest probability approach is obviously always to sell when price is as high as possible. You want to see price come clean up its NFP liquidity that it's left, and the main area that I'm watching here is around about this 4-hour fair value gap, anywhere near that 50% level. But most preferably, you would like to see price push above that 50%, because market would like to sort of get to that 50% level, and that is your sort of highest probability area of price to sort of start reversing. If you sort of get that, and then you're on a free fall back down to continue lower. So that's pretty much it from this weekly, well, midweek sort of forecast for the CPI. If you guys enjoyed, please leave a like. Links in the description for you guys to get access to VIP, free channel, TikTok, the whole lot. I look forward to speaking to you guys again, possibly this weekend. It's been Always FX. Peace out.